So Payments Canada is the organization that clears and settles payments in Canada, and I think that's all I have to say.
Hello, everybody. My name is Hitendra Sachdeva. I'm Director of Products for Real-Time Payments at Interact Corp. And if I talk about Interact Corp has a history and legacy of over 2 decades, working and participating in the electronic payments. And they have a bunch of different products: pay by bank, pay by debit, Interact e-transfers, and digital ID. Now they are coming up with and partnering with some of the strategic partners on the open banking front, and Real-Time Rail is another key strategic move which we have. So any strategic direction in terms of FIs or any payment side happens, Interact is the partner everywhere. So that's what Interact does all about. We are touching almost every Canadian's life every minute.
Great, thank you. So we know we're preaching to the choir a little bit here. You were literally at a payments conference, but we wanted to give a little bit of background. Like, one thing we know that the big innovative shift in financial services offerings often come at the hands of disruptors. And we're seeing that in the payment space. A recent report estimated that 25% of current fintech companies are in paytech. And these paytech firms are meeting the rising demand, and they're offering very integrated solutions for both consumers, merchants, and corporates. And so FIs who want to keep pace with these disruptors, how do we make some key investments? But we know that there's a lot to consider when entering this space. I don't know about all of you, but this has been a great conference for having one-on-one conversations, and definitely the, what does this mean for my core? What does it mean for fraud and security? There's so many solutions. What do I pick? Is definitely top of mind for people. And so today we're going to focus in on the growing appetite for real-time payments with corporates, security and fraud prevention. What are the implications of ISO 20022 standards? And what are some recommendations for, okay, well, this is great, but how do I actually move forward and build a roadmap? So a lot to cover in this time, but we've got all the right folks in place for it. And we'll try to save some time for questions at the end. So let's moving into talking about corporates. So I know folks is there a growing appetite for faster payments among corporates? And I think, Richard, you're nodding. Let's start with you.
Yeah, sure. So there definitely is. And so the market, I think, is sending us some signals. So what do I mean by that? The AFP is projecting that checks will make up only 30% of B2B disbursements for 2022. It seems a little low, but I think it's about right. Notch is seeing an increase, obviously, in usage. The Fed is seeing about a 25% decrease in check usage as well. And same day ACH usage has grown in the third quarter by 53%. And that obviously started at a low base. So there's your appetite. That's what the market is signaling, and an appetite in terms of faster payments, getting rid of check, moving more towards the electronic side of things. Real-time payments in the corporate world, I can tell you just from having the daily conversations over the last couple of years, not much is known. So one of the key factors is certainly going to be education. But when you start discussing it with clients and talking to them about what exactly it is, what it does, you start getting some interest. Now, I've had, these are anecdotal examples, but I've had clients, what they've told me when I talk about real-time payments, the reactions are anywhere from, I'm not interested in paying anybody faster, to, well, I really like to send wires because I can track it with the Fed reference number, which of course I say, that's available to you with the real-time payment system or the clearinghouse, and likely with Fed now as well. We actually had a client recently came to us and said, hey, over the weekend, we got an unexpected shipment of construction material. They have a construction piece, and the vendor wanted to get paid. And so he had seen some of our messaging over our systems about our send capability with real-time payments and signed up Monday for that process. I was actually with a client yesterday, a very large fund, real estate fund and equity client yesterday, having this conversation, very, very superficial knowledge of real-time payments. But you start getting into it, you start talking about it, the treasurer popped up and said, so I could send a payment at 10:30 at night? Of course I said, yes, you can. And then I got to thinking kind of during and after the meeting, I thought, okay, this person has been in a situation at 10:30 at night where they've thought about making a payment. And it's a huge firm, and she's got a huge job. So she probably has been in the office or working from home at 10:30 at night and thought about making a payment. And she kind of said, wow, that's great because the wired windows are shut, ACH windows are shut. Now, that's not going to be an everyday usage for her, but it's, as we've talked about before, it's another option, a very viable option for this kind of firm where, yes, maybe it's a bunch of wires that are under that transaction size limit that she can get to at the end of the day or off hours. And now you can send these payments. So again, I think the market's sending signals, and the pandemic was certainly an accelerator. There was some of this discussion before the pandemic happened. I had clients who were in crisis, who said, how do I do this and how do I do it now? And there were immediate needs, but that has still, there's still an appetite coming out because they've seen the value of it. Now we're talking about real-time payments, and they're starting to understand some use cases. So I'm seeing it. It's going slowly, of course. We didn't expect it at Regions. You know, we've turned on the full real-time payments capabilities. We didn't expect this to take off, and it's certainly not. And we don't quite need it to yet because there's still a lot of questions around fraud and things like that we're figuring out. But when you have the conversation with corporates, you educate them, they start thinking, okay, I can see where the use case is, and that starts. And once they have that, I can pay at 10:30, then they start thinking of the other things. Okay, I could use it for this too. So it's growing. It's going to be slow, but the key thing is education.
Let me, from the operator side and from actually the data on what we're seeing. And you're right, we have a lot of surveys out there, a lot of white papers by many in this room, a lot of corporates asking. My takeaway is we've confused the entire corporate and consumer base in the U.S. They don't even know what faster payments is. We say real-time payments, RTP, we say Zelle, we say FedNow. They have no idea. And then a bank's in front of them, and each bank has its own marketing pitch that may be specific to what they want to sell, not specifically to the commission of what a sales officer gets if they sell credit card over ACH. So right now I feel, and I've watched it for 3 years on the clearinghouse, before that over 20 some years plus in treasury management, but I have to start every conference when I go talk to corporates. I was just at the New York Land Association title folks on Monday. They're like, how is Zelle different than Venmo, and what is RTP, and who the heck is FedNow? So speaking to clients, when you go to the end customer, they have no clue, and half of them don't want to. They want their bank to just figure out how to make a payment to meet what they need. And we're forgetting that. I'm on my soapbox, but I'll stop.
I'll just add one thing to that to follow on that. And you're right. It really comes under a very, very broad umbrella of automation. How do I automate things? How do I make things easier? That's kind of what they're thinking. And we have to fill in what's underneath that and why.
It's intelligent routing. What we in the bank payment modernization world have been talking around 20 years now. It's all about intelligent routing at the engine. But I will tell you, there are wonderful companies that are out there finding it on their banks. And I'm saying finding. It's not like they're being directed, but they see it and find it on their online portals. As of September 30th, we had 124,000 unique business senders on the network. So, that I think is pretty good considering where we are. We did 45 million payments, I think, the last quarter. So we notice in that data, the big guys, basically the agile companies that don't have to make a big project in their back office, and they're able to use their agility and technology to split their payments to send the right kind of payments using the RTP system. I tell every customer, this is not a lift and shift exercise. You are not lifting up all your ACH payments and moving them to RTP. You're not lifting all your checks. We'd love you to RTP. You're not lifting. You should be using real-time payments to augment and to make your customer experiences better. And if you look at most of the use cases on the network, those top drivers of this are who's doing that. I see Rich there. He was instrumental in the industry of getting some of those first early adopters and showing them where they can enhance their business. They can bring more value, more revenue for themselves. And there's a lot of fintechs and even some traditional companies are out there. I want to be able to satisfy my customer right now. He's calling the office of the president and he wants that $20 and he's going to call 50 times. I'm going to tell him I send a check or an ACH. He's still going to call 50 times. Some companies are now doing the RTP right then and there. 15 seconds, that guy's off the phone, never calling again. Those are the places everyone should be looking at from the corporate environment, finding the pain points and stop worrying about lifting and shifting and explaining how it's different than this. Find a way to get the corporates to think instead of lifting and shifting because someone told them they need to put a project in their legacy, in their queue for next year.
And
Thank
if
you,
I
Isaac.
can,
You've got.
yeah, I'm just waiting to chime in here. So before moving to Canada, I was working in Sweden at a commercial bank, and we were at the time doing the SEPA migration or project. So that's kind of where I started. And it's funny that you say education is so important, and I totally agree with that. But to your point, we can't educate them about the industry terms and everything that we know in this room because they don't care about that, nor should they care about that. But we need to educate them about the features, the functionalities we're putting in place when we're modernizing payment systems. So I think the education is so super important, but the right kind of education is also equally important. So like I was working with ISO 20022, SEPA is ISO 20022 enabled. We made a call at my bank very early on to never use the term ISO 20022 to a single corporate client. That was our goal. And we actually had a bit of fun where we punished each other when we slipped and used the term. But I think that was the success that I saw, that focus on the benefits, focus on the features, and what is meaningful for them, and not what we all know as the industry terms.
Right. And if I add a little bit, I think so in terms of awareness and education, it's nowadays it's been driven through the user's behavior as well, the customer's behavior. So the corporates are getting educated through their behaviors as well. So suppose if there is a small shop there and somebody walks in and say that, yeah, I want to pay you by WeChat or Google Pay. Do you have that facility? So then maybe instantly that merchant or that shop owner starts talking to his bank. Hey, I want to have a WeChat. I'm losing my customers. I'm losing my business. And I think this is also driving some of the growth, some of the desire in corporates to have alternate channels and instant payment options and avenues available to them. If you look at the surveys which Fed Reserve did in 2020, so almost every corporate is dealing with some sort of a faster payment, whether they're using ACH, they're using wallets, or they're using anything, maybe PayPal account or something. So they are still doing this. So they want it more formalized, more organized. And I think that is where this real-time payments and everything will come together to give them a formalized and a uniform way of dealing with things.
Curious on this point of education that we were talking about, and we talked about in the course not using our jargon and teaching them about features. Something that came up earlier today as well was around fraud and security. So you may assume I love the convenience of this, but not be aware that you won't have the protections that you have with traditional methods. And so I'm curious as to your thoughts on that and what you're seeing.
So if I start by this is, I think there's a lot of work which financial industry has to do around the fraud protection. So if we look at today's scenario, it's more of a reactive rather than preventive. So it's more of a post facto rather than pre-facto. So the fraud is done, and then we start analyzing the data, analyzing the situation, and then start putting the solutions over there. And I think since morning when I'm hearing it, so we have also heard a lot that there are fraudster scammers community. They're way ahead in the game. There's a lobby. They are investing heavily in the technology compared to what FIs are investing in the fraud prevention. So I think we need to come up with certain parameters where FIs are taking a lead in investing heavily and thinking beyond their legacy systems and taking their information to the new technology, migrating it to that, and putting those steps forward to protect the customers and not taking convenience over the risk. They should keep the risk before the convenience. And I think once that layer is being built, so you will have a lot more minimization in the fraud.
I would say fraud, when we just say fraud protection, and everyone comes to their own conclusions what you're talking about. Fraud is different in every payment channel. Fraud by a bank, I'm an ex-banker, we used to manage fraud at the checking account level. It should be managed at a customer level, not at, oh, I'm so worried about real-time payment fraud. Well, if you've been scammed, you've been scammed. And I'm not sure that banks can figure out you've been scammed. And some of these scams are mostly, a lot of them, if you look at some of the data, friends and family scam. So that's very different than fraud detection of account takeover. In its nature, a real-time, our RTP network is a credit push system. And I know Lee was on previous sessions today. Credit push system in its nature is going to give you inherent fraud protection. You are the only one that have control to make that payment unless your bank did something wrong and let an intrusion. And in those cases, they're responsible as if you're a consumer or if you're a business. They should have done their due diligence. It's their responsibility. Scams all day. And let's face it, I think I started at MBNA in the credit card world, and everyone's used to disputing. And we say disputes are a fraud management tool. Think about that. Do you want to bring that to RTP network and to FedNow? It just costs us as consumers in the industry more. Why is interest rates on credit cards 19, 20, 25%? Who pays for all that? Oh, I didn't really make that $25 payment. I don't like the merchandise I got, and I don't want to go back to the merchant, so let the credit card company. The credit card company isn't paying for it. We are in long term. So fraud detection, yes, there is fraud screening. No bank, and this is what's beautiful, I think, about real-time payments, is it's in the bank trusted environment, in a bank channel. They have worked for years to get the trust in, to put these surveillance systems around in order to prevent someone from taking over your account. We still have business email compromise. So there's items such as that have to be educated. And, I was in a conference a couple of weeks ago, and the guy said, yeah, like, why are people still using AOL.com if you're a professional top of the charts real estate agent and you're using AOL.com? I mean, there's different ways all of us as a business can prevent, and as a consumer, RTP helps by not letting anyone come in to debit your account. Those lovely old gym memberships that everyone loves to dispute by ACH because, you got tired of it and this is the only way you wanted to. You can't do that in RTP in a credit push system. So let's talk about fraud. Is a fraud deterrent is the credit push systems, which is RTP and which will be FedNow.
Yeah, I was going to, you mentioned education, and that's correct because, fraud is prevalent. We see it every day in the bank. On the check side, ACH, a lot more ACH over the last year. Wire, certainly like business email compromise. And so that's part of the education piece of explaining to a client or corporate, this is what the credit push system means. This is why you need to think about it. And there's still going to be questions, well, what if this or what if that? Because we see, you talk about friends and family, it's the customer's customer. So we've had numerous examples of our clients get an email from, their supplier. Hey, change the bank account information. Sure, no problem. They just don't pick up the phone and call. Or they don't scrutinize the email address to notice that there's one letter off. And that's indicative of fraudster. I mean, I get emails. I got one the other day from a client. It was just him. I need to add wires to his account, and it's going to be single approval. I said, like hell you are. Right? I'm not sure if this is BS or not. So, we waited a month for the guy to finally get back to us. And I told him, I said, look, man, you sent me an email. there are red flags all over it, you know, I'm not signing you up for this because you didn't tell me what was happening. So we have to have that conversation with clients. Yes, can there be fraud in an immediate payment and a real-time payment? Yes, but the credit push minimizes to such a degree that you don't have to have ACH alert right now, because if you do this, you don't even have to have ACH, and no one's coming to debit your account. So again, that does come under the education piece, and clients are going to want to know about it. And then I do think, kind of getting back to our original point, when that understanding gets in the marketplace, the wheels turn even a little bit more.
Yep.
Hey, here's a payment system that maybe is less susceptible to fraud, and I'm going to actually have it as a choice. Maybe I'll use it a little bit more than I thought, or maybe I'll just sign up for it when I didn't think I would. And it's a little bit safer. So there's more to come there, but that we have to have that conversation as to why this is a relevant payment type that you really need to consider.
Go ahead, Rich.
No, go ahead.
No, I think that if banks actually understood that with a real-time payment, you're not just getting the payment, you're getting verification and receipt of the payment and all the information that surrounds that payment along with the payment. And not only are you getting the payment in real time, the bank is settling that payment in real time.
Yeah.
Right? So no reconciliation costs, far less customer service costs. Your customers, corporate customers, back office, the ripple effect of how much less customer service that they're going to have to do. If you could add up the amount of money that saves, all these banks would drop their 2023 current plan technology done and implement real-time payments.
Yeah, and to one of my original
That much money.
to one of my original points, I had a client who said, "Well, I kind of like the Fed reference number for tracking." Well, she needs it for tracking so she can tell the counterparty,
Right.
"Yeah, your wire is there." Now, the reality is it may be stuck in OFAC at the bank, right? And lately, it's been getting stuck in OFAC, like you read about. And I've had so many calls. You talk about cost. It's a cost to our clients. It's a cost to me, because it's like, I need you to track down my wire. And now I got to reach out to OFAC or my analyst or somebody in product. Where's the wire? And
Why
that's
do you
a
have to
3-hour deal.
Why do you have to track and trace something that you already have
Yeah.
immediately?
Right.
Right?
And it's just like UPS and FedEx on your phone. As soon as it's delivered, you get it. That's 15 seconds. That's what you're getting.
Yeah.
You do not get that in FedWire. You get it not in credit card. You
Right.
don't get it anywhere.
So it's interesting. We have a lot, that we read about, conventional approaches to fraud management. But what I'm hearing, it sounds like we also need to look at our conventional mindsets,
Yes.
when we look at this, and how do we as an industry start, changing the lens through which we evaluate this for exactly the points that you brought up.
This is a real opportunity, from someone who is on the sales side and heard this for 30 years. But everybody else, this is a real opportunity to really be consultants to our clients and to the corporate world, and to guide them in this, because this is brand new. Lots of details, lots of good reasons why it should be one of their options. They know next to nothing. And there's questions about that, or I like this, or I like that. Well, here's how it solves that. So this is our real opportunity to get it out there and guide people.
But it's going to take time.
Absolutely.
It's not something that you see in a year or two. It's going to take a long time to get that
Absolutely.
understanding out there to the critical mass.
It
Somebody
was our
saying-
5th birthday yesterday.
Yeah.
So
Yeah.
we should be making a lot more steps than we are today.
I think it'll
So
happen.
we started year 6.
I think it'll start
So-
happening sooner. With Fed now coming down the pike, more like DDAs getting into the real-time payment system. And just now that it's out there's more banks like us are on both sides, receive and send. So I think it's not going to be next year. We got a lot of work to do, but
Yeah.
now the cat's kind of out of the bag, so to speak, or the door's open, or further open. So I think, we're going to see more activity.
Yeah, we had our early adopters on the network, and they were amazing. We have 290 banks receiving. We hit 62% of all DDA accounts in the United States. We have 6,000 banks. It's that long tail where you don't even have another bank that's going to give you another percentage. You've got to have 1,000 banks to bring you another percentage onto that number. Those early adopters, they're out there.
Yeah.
They're selling.
Yeah.
15 to 19 banks now can send. So That's a big difference. There's a lot of banks that are just out there on the sidelines receiving payments and not talking to their customers about sending. They're just waiting. I don't know what they're waiting for, but it is out there. And the early adopters, the corporates, the press releases, read their press releases, every one of those is making money. And those corporates are just throwing more volume through it that have tried it. We just got to work on getting more banks to go to their customers and get them on.
So thank you. So before we move to the next topic, I'm just curious, Isaac or Hatinder, is there anything that you want to add to this?
Yeah, I think this is a very interesting area where the shifts is happening is most of these corporate and the small business space, if you look at, they are becoming more aware of the frauds, and they have also realized that most of the credit card transactions are being disputed. And that's where they lose a lot of money. And now they have started asking their customers to pay by real-time payments. So that is working in their favor. There are a couple of reasons for that. One is the cost involved in the credit card payment settlement, because it's 3 to 5%. And real-time payments, you pay nothing, virtually nothing. So it helps them improve their cash flow. It helps them reduce their cost of receiving funds. And then it also helps them to improve their reconciliation process, which is instant. And then they are also coming up with a very, well-deserved attention. The use case which is nowadays is getting is electronic invoice payment and presentment. So any corporate, any small business is now moving towards that rather than going through the traditional way of sending the invoice physically or through mail. They're sending it electronically, and with the connection and the switch attached with it, through the real-time rails, that you just receive the invoice and pay then and there. And the reconciliation is done in no time. So these are, I think, some of the adopters which are also kind of trendsetters.
I was going to go back to my time in the Nordics, and it's quite funny. Like it does take a long time to kind of get that broad understanding, but it's also kind of scary how fast it goes from then. Like when you start having the critical mass understanding what the benefit is. I don't think that we could have a Swedish corporate on this panel because they would wonder what the discussion is all about. There's only a real-time payment. That's it. I used to say that we don't use checks in Sweden at all. I never seen a payment check, but we do print the big ones when you win a prize for 500. So I can't say that we don't use them, but very limited usage. Right. And you don't go back from that, right? There's no corporate in the Nordic countries that is looking for check usage or anything like that. It's the expectation is set, and then they're moving from there. So it's interesting. It's going to take a while. It's a lot of work to get them educated, but when you get that critical mass, it goes fast. So I think you might see that in your curve as well. Bit of a hockey stick.
The issue that you have is that, like, your government sponsored the move to the banks to networking to have a lot less banks. Right? So in the U.S., we're not going to get a government mandate to move to real-time payments. And there's 14,000 banks still.
14,000 still.
So, and the biggest problem that we have isn't about the networks of the people sitting on the organizations and people sitting at these tables represent. It's really the amount of work that has to be done at each of those individual banks to enable their front ends to initiate a payment and their back ends to receive a payment. And nobody is addressing that as the primary issue, but that is the primary issue.
There are some interesting fintechs though that's coming up too that wants to enable that, right? Yeah,
Yes.
one of them. Yeah.
Yeah,
But it is coming. It's becoming more and more like the debate, right? Because we do. It's sometimes a little bit frustrating for us being a market infrastructure, putting all of these features in place, all these highways and everything that we talk about. But it doesn't really mean anything unless we have someone using it.
Right, and like Cheryl just said, like we're doing the best we can to confuse everybody on the planet about where the faster payment.
And I'm so sorry to stop, but I want to make sure we have time to move to the next thing. But we will have questions at the end, I think, maybe. Okay. So, sorry. So, Isaac, I actually want to stick with you and switch over to ISO 20022 because you have the experience in Canada and with the Nordic countries. So, would love to understand what are the implications of this, framework. We know it gives the common language, across the ecosystem. What are the implications for real-time payments? And then how does what's happening in Canada and your experience in Nordic countries mean for the US?
Oh,
Just a,
wow.
just a, a little ask, right?
Just a little one, yeah. So I think the first question there, what does it mean for real-time payments, is quite interesting, because one of the key benefits of ISO 222 is data richness, right? And the data richness, especially in terms of quantity of data and real time, doesn't really go hand in hand. And also many of the use cases with real-time payments and the quality of the data is also kind of challenging, right? So I think the benefit of ISO 222 is really dependent on who you're talking to, right? You have many different players in the ecosystem. If you talk about ISO 222 to a corporate, they're going to talk about automatic reconciliation. A bank might do sanction screening or something like that with the structure of the data. That's the key thing. For someone like Payments Canada, market infrastructure, the key thing is not those two. It's the enabler for innovation. It's the interoperability with other rails, hopefully, and someday, and the fact that it's future proof. So the international aspect of it, and then the evolution aspect of it. So what I mean with future proof is ISO 222 as a standard goes through an annual review cycle where things are added or changed in the messages. So when we, for example, in 2019, when more and more real-time payments got traction with ISO 222, they realized that there's no place to put a proxy of an account number, an alias, which, as you know, is quite important in a P2P payment. So that got added into the ISO 222 standard and the repository to facilitate those use cases. So the benefit of ISO 222 is really different depending on who you're talking to. So I think that's the answer. I'm not sure if I'm going to be able to answer the second one, though, because that's the big one.
That's
right?
the big one, yeah. So I'm curious, Richard, you probably have a take on this as well.
Yeah, so a couple things. First, in terms of real-time payments. So as the payment system gets more adopted, the use of the request for payment will become more prevalent. That's an ISO message to start there.
Yep.
So the clearinghouse is utilizing ISO. FedNow is going to utilize it. All the major payment messaging systems are going in the direction of ISO 20022. SWIFT, they delayed it, but it's going to be sometime next year. Fedwire chips, all these players are moving to the ISO standard. Clearinghouse, I think, is working with EBA on a cross-border project that sometime, hopefully in the near future, we'll go to pilot and we'll get some more information there. Given that ISO, one of the big keys about ISO 20022 is basically the semantics piece. What do I mean by that? Everything means the same thing. The SEPA has terms, the U.S. payment systems have terms, they're different, they don't speak the same language. As Isaac pointed out before we were talking, ISO may speak some different dialects cross-border, but it's the same language. A payee is a payee is a payee, no matter what border you're going to cross, right? So I think that's going to be a big deal as we look to more cross-border opportunities. It's speaking the same language, and that'll be very important. Secondly, to kind of address the question about here in the U.S., so both Isaac and I were part of a project with the Accredited Standards Committee X9 group, and we actually spent a year doing this, and I've done webinars since, and we've made several presentations. We wrote a market guide for remittance content for ISO 20022 implementation. So if you go to x9.org, and it's a little bit of a shameless plug, but it's an important, they don't pay me, so it doesn't really matter. But if you go to x9.org, you'll be able to find this guide, and it was written with all of us here in mind, certainly for corporates, but for bankers, for providers, PSPs, ERPs, accounting systems, and fintechs, right? So the focus of the guide really was what information does the payee need to achieve straight-through processing? That's really what we focused on. We make some recommendations. We offer guidance in there. We talk about a simple tier-based system, tiers 1 through 4. That has to do with the complexity of the data. So most trading partners probably are pretty simple: invoice date, amount due, so on and so forth. That's a tier 1. You get down to tier 4, that's line items, that's tax stuff, things of that nature. But it's all in there in terms of how can this best be implemented for our clients and for the providers that want to use it. Secondly, I'll say this. I see, and this again comes back to automation, I see more and more clients obviously looking to automate their systems. And in the world I live in the commercial real estate world, you're talking about clients who have multiple banking partners, and so tons of accounts across multiple banks. And so they've got to manage this process. So more and more I'm seeing them bringing in workstations and providers like that. And the workstations are right off the bat asking us, can you guys pass ISO messages? Yes, we can, but they're asking that question now. And it's primarily around information reporting, some of it as for actual payment messages. But my point there is that, okay, maybe the corporate doesn't know anything about ISO 20022, but Kyriba or G Treasury does. They're representing them. We know about it. And so that client now is in the ISO 20022 world. And so when you go to them and start talking about RTP and ISO 20022, it's not going to be a complete unknown.
Thank you.
If I
So,
may add a little bit.
yes, you've got 1 minute.
Okay, so I think interoperability is playing a very important role in terms of ISO specifications. If we talk about today, so over 30 countries, are working towards enabling real-time payments using ISO specifications. So I think the next step, as Richard mentioned, the tier 2, when the countries will start exchanging their messages, is not far-sighted. India, the country like India, has already enabled their real-time payments with 3 countries. So you can imagine how fast the world is moving in that direction.
Wonderful. Well, thank you to all of the panelists. And Richard, I'm volunteering you for something. So one topic we didn't have is, what about a roadmap for RTP? So remember this face when you're out on the break? Pull him aside if you want to learn more about what happened at Regions. And thank you, all of you, for a great conversation. This was great.